What's up, everybody? Welcome to another session, episode, workshop, masterclass, however you want to call it, of Better with Paul. I want to say, can I say something real quick? Of course I can say something. I've got the mic. I'm controlling this thing. I can say whatever I want, right? I want to say, what's up to Arlene, Angelique, right? What's up to Teresa? What's up to my sis, Lisa, on Periscope? Linda, Erica, I see everybody. Tony, I see you. Also, let me go to LinkedIn, right? And I mention this to everybody who's a first-time watcher that I always have to look down for LinkedIn because I can only see comments from Facebook, YouTube, and Periscope. Marshawn, I see you. I see you. Sebastian, I see you. Simone, I see you, right? I can only see Facebook and those, here, but I've got to look down for LinkedIn, and I see LinkedIn is on time. Let's see what's going on with LinkedIn. Jessica, I see you. Sissy Johnson from Paris, what's going on? Nalandra, Vivek, Cheryl, Krista Jones from DC. I see everybody. Thank you very much for tuning in, guys. It's incredible to see how much engagement that we're getting on these sessions, and I think it just goes to show that what we're talking about is critical, right? This is very, very important. A matter of fact, our last session that we did this past Monday, if you remember, we covered 50 ways to increase your streams of income, right? And we looked at 55 ways. And I want to tell you something about that session that really changed me is that session, I saw that there were over that 1 hour that we were on, there were over 10,000 people who had watched that, who had tuned into that session live. And in large part, it was because of the amount of shares that we were getting on the video. This is another one of those sessions. Monday was basically undergraduate. Today is basically grad school. And so I want to make sure that everyone right now is sharing this video. Share it to your network. What are we talking about? We're going to talk about how to invest in stocks, right? In cryptocurrencies, in startups, which I'm really excited to talk about startups and more, right? The guests are truly, truly amazing. What I love is that the guests span the gamut, from their experience as investment professionals or just people familiar, right, with investments. Also, there's geographic spanning. Right. I think we have everything covered. All my favorites covered today. We've got the US covered. We've got the UK covered. We have Jamaica covered. Technically, we have Spain covered today. So the guests are incredible. One thing I want to mention also about last session, very important about last session, is last session I told everybody, I said, look, if you want a recap of the session, here's where you go and you can get the recap. I promise you, I was inboxed on every platform. I'm getting WhatsApp messages from people I didn't even realize they had my number. I'm getting emails. My wife has received a message from someone, and everyone has been saying the same thing. Paul, what? I didn't get the presentation yet. Paul, I need the presentation. Paul, where's the presentation on the 50 streams? Is anybody else looking for the presentation? I just want to know real quick. Let me just see. Let me just look through real quick to see if anybody else is looking for the presentation. Yeah, look at this. I see a lot of people saying, yeah. I see you, Venice. I see you, right? Everyone's waiting for the presentation. This is what I'm going to do, right? I see you. I see you. Look, Nadia's like, look, I'm still waiting. This is what I'm planning on doing. Just so everyone knows, there's a method to the madness. I've been working day and night since Monday, since the end of the session, on something very special. All I want you to do is wait until Monday morning. Check out your inbox Monday morning, and you tell me if you're not happy with what you see. Monday morning, I'm gonna hit you with something that I believe is going to make you very, very happy. So if you want that thing, right, and you want the recap to today, make sure you go to Paul C. Brunson /better. And I'll hook you up. All right. So is that fair? There you go. My sister Linda says she's happy to wait. There you go. All right. I like it. All right. Let's get into today's topic. Okay. Already, this is crazy. I see I think we're covering 1,500 right now live, which is incredible. Let's get into today's topic. Today's topic, should I say, I believe is one of the most important topics that we can discuss in our life. And at this particular time, just in my opinion, I think it's one of the most important times to talk about this particular topic. Now, what are we talking about? We're talking about investing. And just so everybody knows, I know everybody's like, Paul, you are mad Jamaican. You've had like 50 million jobs. Well, let me hit you with another job that you might not know I had. When I got out of undergrad, my first job was working at an investment bank. But I wasn't considered an investment banker. I was a research analyst. I was an equity analyst. What's an equity analyst? It was my job. Now I was junior on the team, right? I just came out of undergrad, but it was my job to work on a team. And what we did is we basically analyzed companies. We would go visit the companies. We'd go, look at the products. We'd talk to all the executives from CEO all the way down. We would scour through their financials. I'm obsessed. Finance is really my core thing, right? We would scour through all of that. And then we would have to basically predict where we think the company is going, right? Where we think the stock is going. Is it going to continue to go up? Or is it going to go down, or is it going to remain flat? And then we'd have to come up with the justification why, right? Now, we would take that research, and then we would give that research over to our traders at the investment bank, to our brokers at the investment bank, and then they would go out and they would then advise you on what to do. Every time you talk to a broker, typically, right, they're telling you what some research analysts have been researching for quite a long bit of time. This is how I started, right? Did my CFA, did my, Series 7 and all that. So this feels like today we're talking about, I've come home, right, to talk about this topic. But here's the problem. Despite all of that expertise, I was not investing at that point in time. I didn't own a freaking stock. I didn't own anything. Right? I didn't own anything but debt. That's all I had, right? That's all I had. And it wasn't until many years later, actually, it was the last recession, 2008, when I started investing. And when I started investing, if you know my story in 2008, you'll know that I didn't have any money in 2008. All right. I was a matchmaker that folks were making fun of right at that time. So how did I start investing in 2008? My wife and I, we put $500 aside, and we said to ourselves, we are going to invest in stocks, even if we can't afford what's considered a round lot, right? 100 shares of a stock. If we had to, we would just buy one share, or we would buy two shares. It didn't matter. We would just start. So in 2008, we started with less than $500, buying one share over here, two shares over here, 10 shares over there. And that has evolved over the years to where we have a portfolio, a large portfolio in the 7 figures is what our portfolio looks like. And it started with one share at a freaking time. And that's the reason why today's so important to me, is because we're going to be talking about how do you invest with $500, $200. How do you just get in? But then we'll also cover how do you grow it? All right. So now let's get going. But before we get going, I see everybody bigging up where they're. I'm just curious, real quick. Where are you watching from? I'm just real curious where everybody's watching from, because you know what I'm looking for. I'm just real curious about that. So let me know where you're watching from. And as you do that, I'm going to pull on our first guest. All right. Now, I don't like bios. Right away. Everybody, first out the gate. See, I told you, Jamaicans, we're the fastest people in the world. I say, where are you from? Already, my man Rashawn, before I even finished saying where are you from, he was already there. There he goes. There he goes. There he goes. But I see you. I see everybody. The Bay Area. What's up? I see everybody. I see London. I see where else do I see? I see Essex. Tiffany's from Miami. My man Griffin's from DMV, Dubai, Vivek, right? I see everybody. Marsha Ann, I see you. Okay. Here's my first guest. First guest is a friend of mine from way back, like way back. I feel like I saw her start from the bottom, and what she's doing actually, and now she's created the the Stilettos, right? Stocks and Stilettos Society. That was the worst joke ever, but you see, start from the bottom, stocks and stilettos being at the bottom. That was terrible. Don't hold me to that, Cassandra. I'm sorry. But anyway, this is my girl right here. What she's done, I'm incredibly proud of, because she is her Facebook groups. Her Facebook group, Stocks and Stilettos Society, I think is at 40,000 plus members right now. But what she's doing is she's bringing this conversation around investment to a lot of folks who didn't have this conversation when they were growing up, around the kitchen table. And what she does, and how she does it so well. And in particular, what I love is a lot of her conversation isn't about, $50,000, $100,000 investments. It's about $500, $1,000. So that being said, everybody, round of applause. You know how we like to do it. Big round of applause for my sis, Cassandra Cummings. There she is.
Well, hello.
Hello. How are you?
I'm good. Thanks for having me. I'm juiced now after that.
Cassandra, can I oh, look at this. There's you have a lot of crew right here. A lot of people saying that they're here. I see YouTube is rep for you. What's this, Karen?
Those are my stocks and stars. We support each other.
Okay. All right. So now you got the crew here. You got everybody here. Let's get down to business. Okay. So right out the gate, here's my question for you. What is how about this? Break down so everybody understands your expertise and your, how much of a queen you are in the investment space. What's your experience with investing?
So I have a degree in accounting, and I went into the world of finance right out of college as well. And then I pivoted into financial advisement from accounting. And I worked for some large institutions. Most recently, it was Merrill Lynch. And I ended up, working with some very high net worth clients and universities and school districts and so forth. And I came to this realization that there's so much money out there, but none of my clients look like me. And I'm like, what's going on out here? Because I have highly educated friends, they have degrees, they're attorneys, they are, in the C-suite, directors, things like that. And I'm like, why aren't they working with me? So to, make a long story even longer, I guess, I decided after about 15 years of financial advisement to step out and hang out my own shingle. And a friend suggested, hey, you should start a Facebook group and really teach women. And I said, I think that's a great idea. And that's how Stocks and Stilettos was born.
There you go. All right. And and right now, is it 40,000 members in the group, right?
We're closing in on 42,000.
42,000. Excuse me. All right. So clearly, something about stocks, right? A little bit, right? So here's where I think we should all. This is the question I think that's floating around everyone's mind, especially for those folks who are not yet in the market. Is now even a good time to be thinking about investing, given the fact that we are clearly in a recession? Some people qualify it as heading towards a depression. So is now a good time to get into the market?
I say it's always a good time to get into the market, especially if you're a long-term investor. If you're a long-term investor, you're going to have some hiccups. You're going to have some ups, some downs, some valleys, some peaks. This right now that we're entering is a valley. So as we all know, when it comes to investing, you want to buy low and sell high. So this is a low time for you to get in. just think about it as it being a sale, right? So you can come in and really buy companies on sale that you may really enjoy using their products, using their services. So this is a good time. It's also a really good time to get educated on what investing is and really be able to sort of hone in on a strategy just for yourself.
Yeah, I like it. All right. So now what do you think about this whole, when I reached out to you
Yeah.
about this, about coming on and talk about this, I was like, but we have to make sure that we are talking about under $500. At one point I was like, let's talk about investing with $100, right?
Right.
But what's your opinion on that? For someone who's watching right now who has $500 or less,
Mm-hmm.
and they feel like this is going to give them some education right now,
Mm-hmm.
should they be trying to get in with that level of money?
Yeah, I think it goes back to what you said, starting with one share. It's about baby steps. And I think it's really hard for people to overcome that. Like they feel as if I just don't have enough money. But you really do. There are some great companies on sale for less than $100, for less than $20. And so it's just a matter of really getting started. And then as you build up your portfolio, you can buy those more expensive stocks like your Apples, like your Facebooks, things like that. But you have to get started. And I think that's the misnomer, is that I just don't have enough money. Maybe not right now, but you get started so that you'll have that money down the line.
Yeah, I completely agree. Just do it. Just do it. Right. All right. So hit us real quick about your thoughts on cryptocurrency, because this is one where honestly, I have zero experience and awareness of cryptos. Like I don't even know where they're trading right now. But just for everybody who's like me, right, give us the top three things of, what are the top three concepts or ideas around cryptocurrencies that we should be aware of?
Well, cryptocurrencies, you have Bitcoin, which is the mother of all coins, and then you have altcoins. So these are going to be all your other coins like Ripple and Dogecoin and things like that. So there are a number of different coins that you can also invest in. I think what you need to keep at top of mind is that you should only invest money that you're willing to lose. And that Bitcoin and altcoins, these are relatively long-term investments. Again, you're not going to get rich quick overnight. So if you're putting money into these types of speculative, highly speculative investments, you might have to wait it out for a while. When we had the big boom with Bitcoin a couple years ago, those people who had invested in Bitcoin up to that point, they had been in Bitcoin for years. It wasn't an overnight success, right? It took about 7-8 years to hit a $15,000, $20,000 coin at that point. I think the second thing that you have to also realize too is now they've opened up a lot of access to be able to purchase Bitcoin on a myriad of different platforms. So you can buy Bitcoin on Cash App. You can also buy Bitcoin on Robinhood. So they're making it very accessible. I hear there are even like vending machines where you can buy crypto. And so it's very accessible. I would say, again, start really small. You can always buy fractional, coins and things like that. And then also, if crypto is your jam, then make sure you keep your eye to the ground on what we call ICOs, initial coin offerings. There are always sort of new coins coming on the scene and things like that. One that was popular was called Guap Coin, and it was a coin that was actually run by a Black-owned team. And so just, again, a lot of different coins are being introduced. And so just make sure you're aware of potentially things you can get in on the ground floor.
All right, good deal. We appreciate that, Cassandra. I see a lot of questions coming in. I see, from LinkedIn, especially about, so how do we get started with cryptos? How do we get started with stocks? We're going to cover that all when we bring back the entire panel. So Cassandra, thank you very much, everybody. Cassandra's coming back. She's coming back, but we have to bring on our next panelist. Now, our next panelist is someone who I thought I was just meeting really for the first time to be a part of this panel, but I realized, or should I say, I found out through him that we've technically connected over a decade ago. Our next guest, Damien Peters, I think has a fascinating background. He went to grad school at MIT. He was a product manager at Facebook, and he also started SBM, Single Black Male. Does anybody remember this website? When I say remember this website, perhaps it's still kicking right now, right? But it was everything, right? To me, SBM was the Bible, right? At a certain time. Does anybody remember? Yeah, folks are like, yeah, I remember SBM. SBM, let me tell you about this site. This site honestly helped launch my matchmaking career. There was so SBM like assigned a writer who was Rich Jones, and Rich did like a whole profile on me. And then after the profile, I worked with them to start hosting events, and I did an event in New York. But long story short, they were incredibly helpful to me. And when Damien and I are messaging back and forth about this panel discussion, because he's created a whole nother company, he was like, yeah, SBM, that was me. I was like, oh my God. So I have nothing but phenomenal things to say about Damien. But really, I think what he's done, but more importantly, what he's currently doing is phenomenal. And on top of all of the phenomenal things that he's done and doing, he is abroad. This is my man, Damien Peters, who's in Spain right now, which I love. That's a whole nother topic. But Damien, welcome.
Thank you. Yeah, no, it's loving Spain. Can't really go outside, but I hear it's sunny.
Oh man. All right. So, because it's crazy. So, I'm here in London, and what I've begun to find, I think because I'm now more of the, in the expat community, is how many, in particular, Black families, Black people are now traveling and living abroad. So I should say African Americans are doing that. And it is, I think it's like this massive blessing that comes with it. But anyway, we could talk about a million things. Let's talk about money.
All right, let's get to it.
All right. So first, hit everybody with, I'm just curious, why are you so passionate about the space, about building wealth?
Yeah. So honestly, sorry for my personal story. For me, I actually would not, if you had asked me if I was an investor, I really knew about investing, I would have been like, no, I just do what everyone else does, right? I save some money, I invest, I buy rental properties, things like that. And it was actually when I found out my first son was coming, or my only son was coming along, I really wanted to take some time off, right? I worked a lot, I loved my job, but I was working all the time. I wanted to take some time off away from work. And when I talked to all of my coworkers, so this is while I was at Facebook, I won't say overcompensated, but I was very well compensated along with all of my coworkers. We were doing fine. And people were like, how can you afford to take a year off? And I'm like, like the hardest side eye I can give inside the office, because like, I know you make more than enough where you should be able to take a break off for a year. Like and that was really the point where I started to realize that even though for a lot of people who are doing well in their career, have either earning good salaries, maybe have gone to grad school, whatever it may be, but they're not building wealth. Like they're not looking at their net worth, they're not focused on passive income, they're not building up assets. And the one other turning point for me was when I got laid off from my first startup that I worked on in the Bay Area. So, it's the life of startups, things happen. But a lot of people can't handle being laid off. So when it comes to wealth, it's when the freedom to move to Spain and be in Spain for a while. It's also it's also the safety of surviving like layoffs. And then also it's really thinking about being able to leave a legacy for your kids and having that freedom, which is why I've really gotten excited about people building wealth and increasing their net worth.
Yeah, everything I've read and heard from you, right? So I've been on this trail of, I've heard at least you on 3 podcasts, right? Clearly, you're passionate about building generational wealth, right? Yeah. This is something that you're passionate about. Where do you think? Well, one is, if you could just break that down. What is generational wealth, right, for everyone? But then also, what do you think are the top 3 roadblocks to us building generational wealth?
Yeah. So generational wealth, everyone really should define it on their own for what makes sense to them. When I say generational wealth, what I talk about is being able to pay for my grandchildren's education. So you mentioned I went to MIT for grad school. I couldn't afford to go there undergrad, even though my dad really wanted to. And so I think about how can I set up both trust, assets, lifestyle, and core competencies that will be able to pay for my grandchildren's college education before they're even born. When I think then about kind of the top three challenges, I talked to a lot of people about this different ways. So one of the first things is transforming salary into wealth. And I mentioned this before. Wealth Noir, we specifically focused a lot on high income professionals, and so this will be biased a little bit towards them. But if you're earning if you're earning any salary, but especially if you're earning a reasonably high, and even I'd say above 75,000, understanding how to turn that salary into long-term wealth, into assets, into dividend stocks, into real estate rental properties. Personally, assets, just equities, bonds, and real estate rental properties have been my core, but everyone can figure out what works for them. So just transforming salary into wealth. Second thing is, honestly, financial freedom, generational wealth, early retirement, fat fire, lean fire. These are all buzzwords. And at the end of the day, the biggest thing is that I don't think people understand net worth, and that understanding net worth is your measurement of wealth. When you think about, can I retire early? When you think about, have I built generational wealth? It's a measurement of your net worth. I look at my net worth. I know how much I would like to give to my kids, and then how much they will need to be able to pay for their kids' education, and that is my goal. Understand what net worth is. It's basically your assets subtracted from your and you subtract your liabilities, and make a goal for it. So understanding that game, if you don't understand net worth, you don't understand wealth. And then the last thing too is I love my son with passion, as most people love their kids. I spend time with him. I nurture. I spend time understanding how to be a better parent. And the truth is, people always talk about their money as if they have this love of it. I love money, I'm going to secure the bag, but they don't spend their time and effort focused on thinking about their own money. They want to invest in real estate, but they haven't read a book on it. They want to get into the stock market, but they haven't opened a brokerage account. And they don't spend the time and effort. I spend a lot of time tracking where my wealth is, understanding what I'm investing in, areas that make sense for me to go down. So, for example, I have a small crypto holdings that I look at, and people just simply don't spend enough time thinking about their money, thinking about their goals, and really building up the education that they need to get to where they want to be.
Yeah. What I love is, and we have many things in common, Damien, many things.
Including the bald head.
Yeah, look at this. I mean, we are the same barber, right? But here's what I love. And I thought I was a little crazy for doing it, but I see at least there's one other person. I like tracking net worth. I like tracking net worth. It's like it's one of those things where I've never been able to really say that. I feel free. I love tracking net worth.
It's okay. It's okay. Wealth is all right.
It's all right. That's all right. Okay. So that's my man Damien right there. Damien's going to be back. Damien, we'll see you in a little bit. Thank you very much. Man, Damien has liberated me. I love tracking net worth. Now I'm going to say it proudly everywhere. All right. The panel is good. The panel is good, and it gets better. So next up is my man. So here's the thing. When I got here to London, I've been here in the UK now for 3 years. When I was coming here, I tried to tap into the entrepreneurial community as quickly as possible, right? And I was having discussions with lots of different people. I'd, take them out for coffee, take them out for lunch, and say, who should I know? Who should I know? And in every single one of my conversations, people were like, you need to know Andy Ayim. Do you know Andy Ayim? Do you know Andy Ayim? They were saying it so I was like, Andy Ayim, like he said it like a corporate brand himself, Andy Ayim. It was like, do you know him? All I'm going to say is this guy is it, right? This guy is it. I think he ran Backstage Capital here in the UK, right? He covers everything. Now he's like his own brand, and he's helping people invest in startups, right? Helping people get going with angel investings. He advises on product development. He's a big product guy. But what I love is he's also a really nice family guy. And I love to see that balance. And that being said, now I get to introduce you to Andy Ayim. Here he goes, right here, live with us.
Hey everyone, so excited to be here. Thank you. Should get you to introduce me all the time.
Andy, man, it's like, you know how long I've been trying to get you on these lives. Look, honestly, I've been trying to get Andy on live before I was even doing lives, and he was always doing something.
I was always watching them when I could as well, though. So I was in the audience too.
Okay, all right. Well, thank you, man. I appreciate that. But I tell you what, give everyone a real proper, what's your experience as an investor?
Yeah, I love some of the stories that were shared earlier, like Damien's story. Like I could empathize and relate to a lot of that. And, I started the angel investing school because I noticed that talent is widely distributed, but opportunity isn't. And that didn't sit right with me. So I wanted to just democratize access to the education so that people, even if you didn't have the money yet, could just learn and understand what it means to invest across asset classes, from property, like my man Damien said, to stocks and shares, mutual funds, and investing in startups. Why should it be a mystery to our culture and to our people, right? So that's where I got started with the angel investing school. But funny enough, about 7 years ago, I remember hearing Jim Rohn saying profits are better than wages. And it just hit me, right? Like, I can't just be working. I need to learn how to make my money be like soldiers for me. How can I send my money to go work for me and compound over years? And then when I started learning about, people like Warren Buffett and Graham Bell and Charlie Munger and all these value investors, none of them look like me, but I could learn a lot of lessons about the mindset and the mind frame that you need to be in to go along this long game, this 25, 30, 40-year journey of just investing. And I love some of the examples that were shared because I remember some of the first investments I made was just putting £150. I'm in the UK, so I'm going to say pounds and dollars. You got to forgive me. But I remember putting £150 in every 3 months into S&P 500 tracker. And I just committed for the next 5 years to just do that. And that's the disciplines where I started. It's like going to the gym. You ain't going to see results overnight, but if you stick it and you get into that rhythm and you're consistent, it will breed that quality if you play the long game. And yeah, I love this topic.
There you go. All right. So in particular, I wanted you to be on this panel because I know that you're a big advocate for angel investing, right? As I am as well. I think that's a topic that a lot of people think, I haven't even invested in a stock. How am I going to go invest in a company, like directly into a company? That seems, very foreign to me. Break down what you believe are the benefits, right? And talk a little bit about how we actually do have access and how we all can invest, and we all can be angels. But let me start you with this: should we be angels? Do you think we should all be angel investors right now? And then what are the benefits that come with that?
It's a great question. So firstly, like one of the first lessons I teach on the angel investing school is that angel investing probably shouldn't be your first investment, because you need to be able to invest what you're comfortable in losing. You need to be able to afford to lose it. Sometimes we call it casino money, because angel investing is a very risky asset class. Because if we look at the data and the facts that are out there, over 90% of new businesses fail. And as an angel investor, you're investing into those new businesses. But what you're really investing in is the privilege of going along this learning journey with a startup, to grow with them, to be responsive to them, to be an extension of their team, to help fill their knowledge gaps, to introduce them to partners, customers, new markets, and go along this journey where they'll hopefully grow and do well. But at a minimum, if they fail, are you comfortable with losing that investment that you made? And that's why often I advise people to and encourage people to invest in real estate, invest in some safer asset classes first before you can take that bet into angel investment, because it takes a certain risk appetite. But the truth is, actually, in the last 5 years, things have changed. The game has changed, because we have these crowdfunding platforms, equity crowdfunding platforms like Republic in the United States, or Crowdcube and Cedars in the UK. And these platforms let you invest as little as $100 into your favorite brands and companies, right? And when you're making that small investment, it's not really for a massive return. It's really to you paying for that education, right? It's a lot cheaper than paying for an MBA program, right? But you're starting to learn what are the key terms in a contract with a startup? You know, how do I run due diligence to understand what I'm investing in with startups, right? So you're actually paying for that learning experience too. So that's what equity crowdfunding allows you to do with as little as $100, you know. And the thing about playing the long game is that you have to embrace the downside. You have to accept that not every single investment's going to lead to a result. They're not all going to pay off. Some are going to be losses. And are you comfortable with accepting that at a minimum, I'm just going to learn?
Yeah.
You know, we don't often have this discussion, but it's important to understand that so that we don't get emotionally tied to the fact that we think it's going to be upside on every single investment, because that just isn't the case.
Yeah, absolutely. You know what's interesting about that is, so I've probably made about 8 what I would consider angel investments. 7 of them haven't like 7 of them basically went bust, right? But what I learned and how my network grew,
absolutely,
that will yield forever. That will
absolutely
yield forever.
And if you made those investments in the UK, you also get tax relief. See, we've got a scheme in the UK called SCIS and EIS where you can get up to 50% of your money back in income tax. Okay. So imagine you're investing £10,000 into a startup, you're actually getting 5,000 back, even though the 10,000 is going to that startup.
Wow,
so that's a great incentive to encourage investors in the UK, right? In America, it's not as easy, right? It's accredited investors, but in the UK, there's a window of opportunity that we've got to take advantage of to get our foot in the door.
Wow, I had no idea. Well, I'll tell you what, Andy will be back, right? So Andy's coming back. We'll learn more about the UK. We'll learn more about investing in startups. But let's bring on our last guest, right? Last but not least, we're going to hold down Jamaica. We've got to hold down Jamaica. Jamaica is a must. Real quick, I'm just curious, how many Jamaicans are watching right now? I'm just curious what our Jamaican count is. This is very important. I see I want to see how many Jamaicans are watching. But anyway, while this is happening, this is my man, David. Now, David and I go way back. I don't even know how far back we go. My fondest memory of our next guest, David, is sitting in I'm not trying to flex on anybody, but David and I were sitting in the VIP in what airport we were at? We were in Kingston. I think we were in Kingston. Yeah, I think we were in Kingston. We're in Kingston. We're flying from Jamaica back here to the States. And we are sitting in this lounge. And the best thing about the Jamaican VIP lounges is you get unlimited patties. And so David and I are just going to work. We're just like patty after patty after patty after patty after patty. I've had like 6 patties. I turn, man, David, who I think David's smaller than me, David had about 16 patties. And then this man proceeds, true Jamaican, this man proceeds to ask the person serving the patties if she could bring out some more so he could take them to go. And he then wraps up a whole big box of patties to bring back on the plane with him. I was like, what are you doing? Anyway, my man David is, other than him being a great guy, right? He runs his own investment firm. He has done a lot of deals in Jamaica and in the United States, but I've really brought him here to represent Jamaica as a potential investment, because you may be surprised to know that Jamaica's stock market has been one of the most successful stock markets over the last few years. So this is my man, the patty eater, right here. David Mullings. There it goes, everybody.
They are cocktail patties, just to specify, not the big ones, the little ones.
No, they were not this small. They were
like this. But they were good though. They were real good.
All right. So here's the thing. First, hit everybody real quick with your experience as an investor. I think this is very important for everybody to know.
Right. So, went to the school here in the US, but born and raised in Jamaica, did college here. And then I went back to Jamaica and actually worked with a group called Jamaica National, largest financial firm from a mortgage standpoint, one of the largest in the Caribbean. And I worked on the team helping to develop savings products, investment products, mortgage products, and then moved to work at a private equity firm here in the US for a few years with my cousin, focused on minority certified firms. And then the last job I did was working with a a company called Left Brain Capital, a black-owned hedge fund, and it was a long-biased hedge fund. It was really good to work with someone that looked like me and was doing, essentially Warren Buffett type opportunities investing in the market. He and I have had a lot of discussions, and one of my mentors is Michael Leachin, the Jamaican Canadian billionaire who both love Warren Buffett. And everybody I spoke to in my network felt that it was time to create a vehicle that made it easier for people to invest back into Jamaica. It was the best performing stock exchange for the last 5 years. And so we created Blue Mahoe Capital Partners a year and a half ago. And that's what we're working on now.
Yeah. D, I have to say this. The comments about David being the Patty King or the Patty Goat or the Patty OG. The comments are great. Look at this. Everyone's like, Dave, look, my man, the Patty, he's the Patty champion. No, for real. He is. David, you are the Patty champion. I give it to you. All right. So back. All right. Being serious about this. Clearly, right. Incredible experience, right? Let's just look at Jamaica real quick, because I truly do not think a lot of people understand how successful the Jamaican stock market has been. So really 2 questions for you. Why has it been so successful, right? So actually 3. Why has it been so successful? Where is it now? And for those of us who live outside of Jamaica, is there an opportunity for us to get into the Jamaican stock market?
Right. So I get the first question all the time. I was on Bloomberg in February earlier this year to answer that exact question. Why did Jamaica perform so much better? Right. Over the last 5 years, it was Jamaica, Ho Chi Minh Index, which is Vietnam, and then the USA. And so the number one reason why, though, is that unlike the US, where it was cheap money that was helping to fuel their stock boom, and companies were doing a lot of buybacks, right? Companies were actually the largest purchasers of their own shares. We didn't see corporate earnings growing as much. Jamaica paid down debt. Jamaica had an IMF deal. We had to go to the IMF and get money just like Greece. But unlike Greece, Jamaica actually reduced our debt to GDP ratio from 147% to 97%, and it's on its way to 60%. So the government has been generating cash, paying down debt. And instead of the government saying, hey, 14% interest on our government bonds, and nobody would buy anything else, interest rates have come down, and so people move into the productive sector, right? The government isn't crowding out private investors anymore. So that was a big part of why the stock market has been going. The money needs a yield, so it's going to go into real estate and it's going to go into the stock market. We don't have as much of a private equity market or angel investing in Jamaica. So that's a big reason. But the second reason, though, now we need to think about is Jamaica's location. When I was on Bloomberg, I said that you should think of Jamaica as the Singapore of the Western Hemisphere. Right? Jamaica is the 3rd largest English-speaking country in the Western Hemisphere. It's the US, Canada, and then Jamaica. So we've seen nearshoring, for example, of call centers, business process outsourcing, coming from India back to Jamaica, Colombia, and elsewhere. Well, Jamaica is where they're going to be speaking English. If you come out of the Panama Canal as well, you run aground in Jamaica. If you close your eyes, you run aground in Jamaica. And Jamaica has one of the 7th largest natural ports in the entire world. 7th largest naturally protected harbor, just like Singapore has a pretty large harbor. And so, however, that port, though, can accept post-Panamax vessels. So if you Google post-Panamax, ships used to carry up to 10,000 trailers, 20-foot equivalent units. Now, just last week, Saturday, Jamaica accepted a ship that was 14,000 plus, 14,400, and only 2 ports in the Caribbean can accept that ship. So it can't dock in Miami, it can't dock in Jacksonville. That ship has to stop probably in Jamaica, break bulk, and then ship elsewhere. So this is a great opportunity. And that's why pirates were based in Jamaica to raid the whole Caribbean. It was perfectly located for that. So those are some of the reasons why you should be looking at Jamaica. A third one, though, that I think is important. You asked me, how is it doing now? So, of course, like every market in the world is actually down. We're down somewhere between 25 and 30%. It depends on where you're looking at. But there are specific companies that are actually up. If you're looking at the long term, though, this is great. Over 5 years, it was up 300+%. You tend not to want to invest at the top of a market. So, the investment bank we're working with put it very simply. Right now is a great entry opportunity because everything we want to buy is at a discount of 20 to 40%. So you look for companies domiciled in strong long-term growth industries with good management, and we're looking to buy and hold them for the next 5 years. to get into the market is actually really hard. That's why Blue Mahoe Capital exists. You can't just go online and set up an account to start buying stocks in Jamaica. There's no exchange traded fund listed in the US to give you exposure to Jamaican companies or Caribbean companies either. And that's why we created Blue Mahoe Capital. So we are a private investment firm that has a brokerage account in Jamaica. We buy stocks there, and we're also buying some private companies. If you want to do it now, because we're not public as yet, we're going public later this year. If you want to do it right now, you had our private investor with us, or you could actually go through our group in Canada called Mandeville Private Client, which is actually Michael Leach's company. Yeah. You can open an account, whether you're US, Canada, UK, wherever, you could open an account with them, and they can help you buy individual stocks. You'd have a privately managed account, and they can help you pick individual stocks, and you still get all the legal protections we are used to, and you can do it online.
Yeah. Yeah. You know what I love too is I get prospectus from different IPOs in Jamaica all the time. And what I love is that they're relatively affordable. You know, you can get in for 15 US, 10 US. I mean, it's
so interesting. So we, for the blue chips in Jamaica, convert to small caps for the most part here in the United States. But again, that's where you get some massive growth opportunities. And this example I use for everybody, why Jamaica? We tend not to look at it, but if you look at any emerging market that's grown over time, this is when we're looking at the BRIC countries, right? Brazil, Russia, India, China. Certain things always grow once you're moving people from poverty into the middle class, right? Jamaica had 15 quarters of economic growth. That was the first time ever, a record of economic growth. We had record low unemployment. So these were good things within the country. And it wasn't dependent on US companies doing well. So the economy itself was growing. Well, you know, financial services is going to grow because people who now have more money need to buy cars and get loans. They need to borrow money for their companies and to buy buildings. But then there's another one that is important is when you think about the fact that we're moving from inefficiency towards being more efficient. The Prime Minister recently said we need to start doing things at boat speed, right? Jamaicans are known Caribbean people time. Let's do things at boat speed. Well, information technology is going to be a big thing. We live in a digital economy, the fourth industrial revolution. So that's also somewhere to invest in. And then agriculture is a big one.
Yeah, I think. It's a big one. Yeah.
We just don't think about it, but it's scary to say Jamaica imported $800 million worth of agricultural products per year. $800 million. Well, borders are now closed, so everybody's worried about food security. A lot of that was going to hotels and the tourism industry. So that's obviously shut down. There's a huge opportunity to replace that. That's now cash that's earned on ground in the island, within there, and then multiply.
Yeah. I think the beauty of this panel, and David, thank you. I mean, a lot of people are blown away. They had no idea about any of these statistics, and I wanted to make sure that you came on and blessed everybody with that. So guys, David's coming back in literally 30 seconds. So everybody say goodbye to David for 1 second, then he's coming right back. I think the beauty of the diversity of the panel is that we get, you know, a varying, you know, degree of point of view. But that being said, I'm going to bring the panel back on right now. Here's what I want to do. It's 5:48, but just so you know, I did plan to run 15 minutes over. What I want everyone to do right now is your most pressing questions. Get those questions in because we have a short amount of time. We're going to do a speed round with the panel. And I want to make sure that I'm getting your questions addressed. So make sure that you get those questions in. That being said, let's bring them back. Ladies first. There she goes. There he goes. There. Uh-oh. My order was messed up. My apologies to Andy. My order was messed up. I think we're okay with that. Okay. So everyone is ready, right? And the number one question I've seen out the gate is, how do we start? And I'm assuming that is, how do we start buying stocks today? And those questions are coming from the US, they're coming from the UK, and they're coming from Jamaica. So if you were advising everyone, let's just go right around, but real quick, succinct, how do we start? How do we do it? How do we start investing?
I would say you'd have to open up an account. You've got to open your account, get online. It takes literally, 10 minutes maybe to get an account open. Usually takes about a 24-hour waiting period. And then once you get your account number, move some money over there and then, buy your first stock. It's really that simple.
Yeah, one thing that's been great now is that after Robinhood got popular enough, every single brokerage now offers free trades. Several of them are offering fractional shares now, so you don't, the fact that Google trades at 1,200 or whatever the share price is much less of a stopping factor for you. Personally, I always recommend if you don't know what you're doing, there's a ton of great S&P 500. Vanguard has a great option that's very low cost. Just buy it. It'll immediately invest you into the entire stock market, or you could look for specific country exchanges. And then personally, I'm a huge fan of robo-advisors, just because if you don't know what you're doing, they will ask you 5 questions. You throw $100 to $100,000 at them, and they will allocate you across a bunch of funds. So if you don't know, if you're too afraid to pick individual ones, if you look at M1 Finance, Wealthfront, Betterment, or some of the big ones, several of the brokerages offer them also, but automated or robotic advisors are a great option to start.
Yeah, I'll just supplement what's been said already. So there's a number of platforms such as Robinhood, Free Trade in the UK, Hargreaves Lansdowne in the UK, and Vanguard. And the key thing to really compare across the platforms is the transaction fees, to understand how much they're taking each time you put money in and how much they're taking each time you take money out, because it adds up. So that's what you need to pay attention to, who's taking the lowest transaction fees. And secondly, I wouldn't start with single stocks, because investing is all about diversification, different geographies, different asset classes, and different sectors. So the best way to get that exposure initially is through what my man Damien was saying, through index trackers like the S&P 500, or even managed funds. So there's a number of those out there as well. So I would start with those and just getting into the habit of investing maybe either every month or every quarter, even as little as $100, just so you can get into the habit. Because once you're an active participant, suddenly, no surprise, you start learning.
All right, so I will second or third everything that's been said. The one I actually like is not Robinhood, it's called Stash. Just Stash, and it's a great app. That's where I got my kids started. Stash allows you to do either the single stocks, and I agree with Andy, you don't start with single unless you know what you're doing. You want more diversification. But Stash allows you to actually do something like roll with Buffett, or I can focus on technology. So you can be stylistic from an investor standpoint, and it's super easy to sign up. But I think Andy touched on something that's really important. Start and then do it over time. Don't have 500 and put it all in once unless you're doing 500 again next month, because it's what we call dollar cost averaging. So you buy the same amount every month because the stocks can go up and down. And right now is extremely uncertain.
Gotcha. Love it. A lot of questions across the board on this right here that Sabrina wants to know. What strategy? So what should we be buying right now? I know, Damien, you're talking about index stuff, but if actually, what would you say to this? What investment strategy should we use? So, Damien, I think you already jumped on it, but what investment strategies would you suggest we use first-time investors?
So there's a very easy, well-known strategy, which is just kind of balancing between stocks and bonds. The old rule used to be, I think, you take 20% in bonds and then you add on a year for you add on 1% for every year. But long story short, VTI and BND. These are 2 exchange-traded ETF funds. If you buy them, if you're feeling very risky, you're very concerned about the risk, buy more bonds, maybe do 30% or 40% in bonds. But realistically, most people take every dollar that you have, put 80% in VTI. This is very simple. That invests in the entire US stock market. BND invests in a mix of bonds. And this is a great early starter strategy. And going back to several points, it's about growing and understanding. Your second trade, maybe you start picking individual companies. Maybe you actually look at small cap. Maybe you look at emerging markets as opposed to US markets for your ETFs. But VTI and BND can get anyone started very, very easily. And you'll be well diversified.
I would love to add to that if I can quickly. Ray Dalio's got a great video on YouTube called How the Economy Works. And it talks about the big cycles of credit and debt. Okay. And the reason I said like S&P 500, for example, is because on average, those index trackers outperform fund managers by 96%. Okay. So the median return that you get from an index fund outstrips VCs, outstrips the median return of managed funds with stocks and shares. So it's actually one of the safer strategies as long as you're averaging. And averaging is what I was describing around putting like $100 every quarter, so that sometimes you're investing high, sometimes you're investing low, but you're averaging out over time, so that you're just getting in, and you'll learn by doing that too.
Yeah, as Buffett has said, compound interest is the seventh wonder of the world or sixth wonder of the world. You invest, you invest, it grows. The growth will grow in addition to your original growing, and soon you're a millionaire.
Yeah. All right. So then what about this one? Is a couple questions have popped up around. So how do we get started in Bitcoin, and how do we get started investing directly, as an angel investor? So how do we do that?
So Bitcoin, that platform in the US, we primarily use something called Coinbase. And so it's relatively easy to open up an account with Coinbase. But like I mentioned earlier, you can now even buy small fractional units on platforms such as Robinhood or even Cash App. So there are a lot of different ways to enter the cryptocurrency market as well. And again, you don't have to have a lot of money. So if you want to put $50 in, $100 in, say out of your $500 initial investment, you can also break it up that way.
Sure. And in relation to angel investing, in the US, you have to be what we call an accredited investor. And that means that you have a net worth of either $1 million, excluding the value of your primary residence, your home, or you have income of at least $200,000 a year for at least 2 years. In the UK, is a little bit more relaxed. We have something called a sophisticated investor, which is someone who basically earns around $100,000 a year and is aware of the risk of investing in that asset class. Now, in both markets, the only other way you can get in is through what we call an angel syndicate. Okay, and that's through putting as little as $5,000 or $10,000 into a group of other angels who are investing into the startup. And the truth is, if you have differentiated access to someone who's starting a business, you can invest. So if you can get to someone early enough, you can invest. So there's a guy called Mike Elps, I believe, who invested $5,000 in Uber because he got there early enough to write the check, put it to work, and write it off. So if you have access to those startups, you can get in early. The challenge is, when you're building your strategy with investing into startups, 95% of startups fail. So you need to make 100% of your return, maybe from 1 out of 20 investments that you make. So it's really a long-term play to say, am I going to be able to invest enough capital over the years so that I can diversify enough and my risk isn't all in just one or two companies or sectors?
Right. And on the US side, Andy, there's a Jobs Act that was passed under President Obama. So there is a way for you to invest, right? And it's called through regulation CF, regulation crowdfunding. So whether you use a WeFunder, I'm sure Damien and Cassandra know, you could invest up to, I believe it's 10% of your net worth or a certain dollar amount. But these companies you have to use a platform that's vetted by the SEC approved. They have a FINRA license, but WeFunder, I believe is one of them.
I think Republic is another, yeah.
Yeah, Republic's another one.
Exactly. But right, as you say, invest in what you understand, please.
Yeah. All right. So this may go left, but this is one that I've seen nobody ask this question, but me personally, I want to know this. All right. If you each had $1,000 or Andy, 1,000 pounds, right? It's a little bit more than $1, right? Right. If you had $1,000 or 1,000 pounds, okay. And I said, you must invest this in the next 24 hours. And you could invest it on anything. You could invest it in a Peloton bike. You could invest it, however, anything. What would you do? What would each of you do with that $1,000 or 1,000 pounds?
All right.
Everyone's being polite, yeah.
Yeah, I know, right?
First.
Cassandra, you want to start?
I'm going to take a risk. I'm going to put my money on Elon Musk. $1,000. I'm going to park it on Tesla, and I'm going to let it ride because I think Elon is a genius. And long term, I think he would make me a millionaire off my $1,000 investment. So I'm going to park it there, and I'm going to let Elon do his thing.
Yeah. So I will give the more boring answer. So I would adjust. I wouldn't put any money in bonds per se if it was $1,000 bet. Personally, what I would prefer instead of 1,024 hours, I would actually say I'm going to invest $200 every month and commit to keep once the $1,000 run out after 5 months to keep putting in $200. That would by far give you a better return building up that habit. But to answer the question, I would buy probably a mix of U.S. and some international equities. The truth is, U.S. market has rebounded, so it's been a little bit more interesting there. But right now is, everything's on sale for the most part. Everyone's unsure about the future. A lot of great stocks have lost value if you put money just generally into the market. So going back, I would probably do a mix of like 3 index funds and drop it all in those 3.
Okay, so usually I would say, I'd put that money into S&P 500, Vanguard, or UBS, but I'm not going to go for the boring answers today. I'm going to mix it up. So they say that when there was a gold rush, the people that invested in the uniforms and the pickaxes made the money. Okay, and there's a company called Zoo Digital Group, and what they specialize in is in dubbing software for video on demand platforms. So Disney Plus, Hulu, Amazon Prime, Netflix, they're the ones that are dubbing those Spanish shows like Money Heist into English, right? So they have all of those contracts, and I believe that market is going to continue to grow for the next 7 to 10 years. So I think they're the pickaxes in this market, right? They're actually on the fringe of a growing market, and they're going to benefit from that trend. So I don't normally say this, but that's the single stock that I'm really bullish on, and I'm going to double down on over the next year or 2. There you have it.
So I'm not going to be bored with this $1,000, and I'm not going to cheat and stretch it out past 24 hours. So 24 hours, $1,000. I am actually going to spend $25 to go and buy a book. I'm going to invest in myself. I'm going to find one book that I can read. That's one. The rest of this money, though, I'm buying some stocks in Jamaica in the financial services sector. We actually own them. So I'd buy NCB, National Commercial Bank. Those who are watching know about this. I would buy into 2 other companies down there in the agricultural space that export outside of Jamaica and earn US dollars. And so I'd spend $500 in Jamaica, and the balance, I'm actually worried about the US stock market. I think we actually have more to fall. So I wouldn't buy into an S&P 500 fund either. I would get very specific. So I'd buy a little Warren Buffett. I trust him. He has cash to go and buy something and get it on sale. He's trading at a discount. And then one that I really would buy, some people think I'm crazy, but is looking at a company like Discount Auto Parts or the auto trader companies, because people out of work, car sales are massively down this year. So people keep their cars longer, which means that they need to get services done longer. And as one of my mentors said, you can invest in non-Amazonable businesses and still do really well. You can't order mechanical services for your used car that's 7 years old on Amazon. So I would buy something like one of the auto parts trader companies.
Yeah. You know what's funny? Everyone in the comments, should I say, everyone is laughing because they were like, look, Damien, he saved money. He saved money. I could go, he saved money. We're like Cassandra and Andy, they're gonna bet it all. Like,
all on black. Like.
Yeah, but I love it though. I love it because I was listening. I was like, I don't know. I like what Damien said. I don't know. Maybe Elon Musk. Yeah, he's that. So anyway, so here's where I'm going to go. This is terrible. This is going to be my last question. Similar to the last question, similar to the last one, but maybe your strategies will change. So here's it. It's a 2-parter. What percentage of our wages, right, should we be allocating to investing? Because everyone is generating some kind of income, right? Whether it be $10 a week or thousands. What percentage should we be investing? And then my second question there is, what's the best long-term strategy, right? So what are you individually doing long-term to generate wealth?
Okay, ladies first again. I think that, starting off about 10% is a good number. It's a good round number to start with. And then you slowly build up that percentage as your salary or your income increases. And I think over time, if you're doing the dollar cost averaging, like David mentioned, you will see incredible growth in your portfolio. Long term, what I'm doing, I'm buying a lot of dividend income producing stocks in my retirement portfolio, where I'm reinvesting those dividends to take advantage of that eighth wonder of the world, compound interest. And so for me, long term, those stocks are just sort of sitting over there. I have some dividend aristocrats. I have Vanguard ETFs. I have a Vanguard Wellington. I have VTI, the Vanguard Total Stock Market Index. So those are some index funds that are layered on top of some individual stocks that I have in my long-term portfolio. So that's my strategy.
Yeah. So for me, one, I want to add on a little bit to my past question. If everyone has something more interesting. One interesting bet I do think right now is actually Chinese tech companies. Long story short, because of what's US's impact of COVID and its reaction, especially as we see on the stock market, I like China for certain reasons, and then Chinese tech companies. Having worked in a tech company and looking at Chinese tech companies, they're pretty hardcore. But anyways, going back to the actual question. So in terms of portfolio, for me, it's really primarily stocks and then and bonds, mostly stocks and bonds. And then the second thing for me is income producing real estate. So for one reason I'm here in Spain and I don't work as much as I used to and I play with my son is because I have several rental properties that cut me a check every month. Knock on wood, I've been very good with my tenants in terms of COVID. Everyone's been thriving and sustaining. But I do really like real estate as a asset class. I focus on cash flow, but in addition, I build into my deals a little bit of appreciation. So I look for value added repairs I can do. So for example, I built a bedroom in 2 units that I have, and that increased the value above my initial investment, the amount of money I spent to actually build those bedrooms. And then secondly, I do like the cash flow that I get, whereas the yields on dividend stocks are typically lower than you would get in terms of a reasonably good cash flowing property. So that's in terms of my long-term plan. I'd like to keep anywhere between 40 to 60% of my assets, I'd say, in more traditional equities. The remainder minus my experimental budget in real estate. And then I try and keep around anywhere between 10 to 3% of my money in things, for example, like investing in companies, investing in cryptocurrency, or more riskier investments. But I'm always experimenting with my money to try and figure out what makes sense to add into my bigger asset breakdown.
Yeah, I think similarly, like it's important for people to understand the difference between like wealth creation and wealth preservation, right? So a lot of the billionaires that we read about, like Warren Buffett and stuff, family offices, they're preserving wealth. So the strategy is very different, right? So right now in this crisis, they're putting a lot of their money into platinum, into gold, into safe asset classes. If they had exposure to like the travel companies or the oil companies. But all of us here, we're talking about wealth creation, you know, and I have to be transparent here that 70% of my wealth in terms of investments is actually in real estate. Is in real estate that pays enough net yield and cash flow that allows me to save up to invest in the next real estate investment too, you know. And I have a similar strategy actually with investing in mutual funds and in index trackers. Like I'm investing about 20% of my net worth in that because actually I let the dividends accumulate and add on as compound interest so that it stays in. I'm not taking it as an income because I don't need it as an income. Right, and that's the compound interest that's adding up each year. And then less than 5% of my net worth is what I call my gambling or casino money, and that's what I'm investing into the startups. And then once I write the check, I put it to work. I become an extension of their team, and I'm helping them. I'm introducing them into customers. I'm helping to fill their knowledge gaps, and I'm helping them with further funding if it's necessary. You know, and in the future, I'm going to look to actually start acquiring companies and acquiring management stake into companies, similar to what private equities do. Actually, so anything that's like really high return on cash, you know, so we can go into that later, but yeah, that's my strategy at the moment.
All right, so love all of those so far, and love Andy talking about wealth preservation versus wealth creation. I'm on that wealth creation journey as well. And so my specific long-term strategy is a little different from most of us on here, from most people. You know, Michael Leachin is my mentor. What Mike said is you find a role model, get the recipe, don't change the recipe. You can only change the recipe if you've exceeded that role model. His role model was Warren Buffett, who is mine as well. So I got a mentor, I found a role model, got the recipe. And in that case, we are doing investing in private companies and public. 99% of my net worth is tied up in Blue Mahoe Capital Partners. I am building my own company that is going to help other people that look like me to create wealth. I'm building my little baby Berkshire Hathaway, which is not what most of you should be doing. You shouldn't try and tie everything up into a company. But whether you're Mark Zuckerberg, Richard Branson, or so on, if you're confident that you can pull it off and you're young enough, you should be taking that risk. So that's what I'm doing long term. It so happens though that the company we are building though invests in some early stage companies, but we're mainly invested in profitable existing businesses. So it's a lot less risky than if you said, hey, I have this idea, I lost my job, and I'm now going to create a startup and hope that it works. So that's my long-term investment strategy. I think most people need to decide who are you going to follow, who is your role model, and get that recipe and stop. Don't get 100 different options. Like, get a strategy and then stick to that strategy and focus and then be disciplined as the entire panel has been saying.
Yeah.
And one book I would love to recommend actually is a book called Profit First by a guy called Mike Mikovich, because it talks about this system about paying yourself first. You set up different accounts. You pay an account for your owner's pay, an account for your taxes, an account for your investments. So as soon as the money comes in, it gets distributed and divided straight away. So you know how much you have to spend depending on what bucket it goes into. So getting into that discipline helps psychologically as well.
Yeah.
I want to also recommend The Automatic Millionaire by David Bach. That's another really good book, and it will set people up for success in investing as well.
Okay, I love it. I tell you what, let's go around the table. Damien, David, what would your top book recommendations be on this topic?
Yeah.
So you go ahead, Damien.
No, you can go ahead, David. You got it.
This is such a polite panel. Can I say this? This is the most polite. No, you go. No, you go. Cassandra, ladies first. You go. No, you go. And I have to say this. And also, you guys are so well in tune that you have a rhythm. Cassandra goes, then Damien goes, then Andy goes, then David goes, then Paul jumps on screen. I mean, this is like choreography. This is beautiful.
The dollar band.
So I'm going to cheat and give you two books, not just one, two. But that's fine. They're in the same. So one of them is actually called The Warren Buffett Way. I'm a huge value investor, and I like how Warren Buffett focuses. So The Warren Buffett Way. And then the second book is by Jack Bogle, who founded Vanguard. We keep talking about these index funds. And so it's called The Little Book of Common Sense Investing. Those are two books I think that you would normally not get recommended. That's why I want to give you those.
Yeah. So the one actually, I'm rereading it now again, but I'm biased too. But it's the Millionaire Real Estate Investor. I always forget Williams of Keller Williams. It's Kelly. But anyways, one of the founders of Keller Williams. He has a few books. The One Thing, but the Real Estate Investor, and it talks about buying $1 million and then owning $1 million. So not just what it would take to actually acquire this type of real estate, what you'd be looking for, what kind of makes sense for you personally, but kind of the operations, the deal structure, what you would be doing to actually own $1 million worth of real estate and really understand what it would do to your life and what that would take.
Yeah, love it. I love it. Did you say, is it Gary Keller? Is it Gary?
Yes, that's it. I always
The One Thing.
Because The One Thing, I read that by Gary Keller, and it was phenomenal. But I tell you what, everybody, right? If you thought the panel was fire, round of applause. They're clapping for themselves. That's how fire they are. They're clapping for themselves. All right. So here's what I want to do. Just one by one, I want to say our goodbyes. So we know the order. We've got an order down right now. Cassandra, first, thank you very much.
You're welcome.
Thank you very much. How can we all support you?
You can follow me on Facebook, Stocks and Stilettos. Again, we have a growing community of women investors. We have recently started a group just for the fellas as well, and they can join us at MVP Moneymakers, because we know men are always MVPs when it comes to their money. And follow us on Facebook. stocksandstilettos.com is .co is the website. And then we're also on Instagram at Stocks and Stilettos. So you can find us there.
All right. Now, what about this? What about this little surprise that you have for us?
So I'm still celebrating my birthday, Team Taurus. I have a really great bundle for you. I just recently turned 47. And so I have a birthday bundle that I put together called the Birthday Bundle, Better at 47. And I have a class on marijuana investing, Bitcoin investing, 401ks, Roth IRAs, dividend income calendar. It's really a great bundle that you can go through a number of courses for just $47.
Yeah, that's fascinating. We didn't even get into marijuana.
Yes.
we didn't
into it.
It would have been nice to get into some marijuana. It would have been really, really nice. It's been a long day, but no, we didn't talk about marijuana stocks at all, which is interesting. But it's all good.
If you get it there in the bundle.
Okay, there we go. You can get it in the bundle.
Right.
Cassandra, thank you very much. It's always good to see you. I'm proud of you.
Thank you.
Everybody, make sure you support my sis. Right, go to this right here, bit.ly/better at 47, and also make sure that actually, Cassandra too. Will you be in the comments at all? Because I see a lot of questions that were targeted right at you. I don't know if you have a second to. There's a couple thousand. But
I think that can help. Yeah, absolutely.
All right, good deal. Because there were some questions in there. But thank you very much. We will see you. All right, everybody say goodbye, goodbye. All right, let's move on, guys. Up next, who was next? Oh yeah, we have our order. Our order coming to you from Valencia, Spain. There he goes, Damien.
So thanks for having me. I really appreciate this. It's always good to reconnect after a decade of having not worked together. And randomly, SBM or singleblackmale.org is still up. You can see, I think your comments actually from back in the day are still on the site somewhere.
Oh, really? Oh my goodness.
No, it's crazy. And I forgot to mention my family, I'm actually Antiguan. So Jamaica's a cute little island, over there, but Antigua's we're the real Caribbean. Y'all have 5 jobs. No. We got about 8. I've had about 8 jobs since I was 4. So,
no. Hey, I don't know how the audience is gonna find that. Oh, hold on for a second. Let me just see how David feels about that. I'm just curious.
So I only got 2 things to say. Yes, Antigua has 365 beaches because the whole
one for every day of the year.
But I think your population in Antigua fits into just Kingston.
All right,
possibly, quite possibly. But we all at the beach.
There you go. But Damien, really, I am not only impressed with your journey. I'm proud. I'm so proud of your journey. I love everything that you do, and so how can we support you?
Yeah. So one is when you type Wealth Noir into anything, you'll find us. Pinterest, Instagram, Facebook, Twitter, wealthnoir.com. And really what we focus on, again, is really helping people turn salary into wealth. And we really take the approach of trying to introduce you to a lot of different concepts. We try and make the things that the rich use and that they have been passed down generationally and that haven't been exposed to many of us, especially if you look like me. And what we do is try and break those down, make those applicable to you to help you on your own personal journey in wealth to understand. So we're a community of like-minded millennials focused on building wealth. You can join us at wealthnoir.com/join. And we have a lot of exciting things that I can't get into right now coming out in 2020. Been quite productive during this lockdown. So, and if you follow me personally at The Real Mr. Peters on Instagram, if you're more interested in when I can start traveling again, I travel about once a month while I'm here in Europe. So,
yeah, I love it, man. I love the legacy you're building for your child. I just love everything. Damien, you had me at 100%. Until that little dig on Jamaica. Now you're at 98%. But this is what I love. There are people, Damien, you have to check it out. There are folks like my man, Andrew McNeil. There are folks that are really upset that you call Jamaica cute. And I love this. People like Annette are like, what? You had 8 jobs? I had 10 jobs. I had 16 jobs when I was. But it's all love, as we see right here. It is all love. Damien, thank
Exactly.
you. Let me get it back up real quick so everybody can see it. Wealth Noir. There you go to join. Thank you very much, man. And thank you for even all the stuff that SBM you guys have done for me. Thank you.
Okay,
Thank
definitely.
you. All right,
No problem.
everybody say goodbye. Say goodbye. It's all love, guys. It's all love. All the Jamaicans, calm down. It's okay. It's okay. All right. It's okay. It's okay. All right. So now, next up, let's go to the very safe UK right now. My man, Andy, right? Andy, thank you.
No, you're welcome. You're welcome. I've got to quickly just say, like, I'll do an injustice if I don't say this. Like, I originate from Ghana, so big up all my African diaspora. I just got to put that out there real quick.
There you go. All right. This is good. We love it. We love it. Do you have anything negative to say about Jamaica?
Nah, man, it's all love, man. They're my brothers and sisters.
All right. Just checking, because I was going to bring David back on, right? But
nah,
no.
I love those parties.
And real talk too is, I was supposed to be I was technically supposed to be almost coming back. I was spending a month in Ghana. We were going before the world changed, we were going to spend because I really feel like West Africa is the center of the world. And so, but that being said, man, Andy, thank you. How can we support you?
Yeah, so I run a weekly newsletter, which you can find on my website, andyayim.com, and sign up where I share news on Black tech, Black entrepreneurship, and Black investing. And I run the Angel Investing School, right? And it is tailored to a UK context, but 80% of the lessons that you learn is applicable globally. And the next cohort will be in September. There's 30 places, and I announce it first through my newsletter. So that's the best place to sign up and check it. And then you can connect with me on LinkedIn, Andy Ayim, or on Instagram and Twitter, which is Andy's HVC, at Andy's HVC. So look forward to connecting with a lot of you, and thank you for your attention this last hour and a bit.
And I tell you what, man, Ghana is showing up right now in the comments. I didn't realize we had this many Ghanaians in the house. There you go. I tell you what, thank you, Andy. Thank you. I'm gonna make sure that when all of this craziness is over, man, let's connect. Since
Sure.
we're right here in the same town. But thank you. There goes Andy. Everybody, say goodbye to my man Andy. I didn't realize. Wow, yeah, we got Ghana on. Ghana is like for real in the house. All right. Last but definitely not least, we've got coming to you, representing all of Jamaica.
So I need to say, it's so funny that Damien is from Antigua. Of all the islands, my wife actually lived in Antigua for a year and went to school there, and my sister-in-law. So lots of love to Antigua. Don't worry, I don't want the small island massive to come after me.
There you go. It's all love. It's all love. We are all family. One love for sure. David, thank you. A lot of people learned a lot about Jamaica and Jamaica's economy that we didn't know. So thank you very much for that. What can we do to support you and connect with you?
Well, the most important thing is to go to bluemahocapital.com. On the website, in our media section, you can see some of the videos that we've done. We've done interviews with top economists, investors in Jamaica, the head of the Bank of Jamaica. So it can teach you a lot more about the country. We talk about the kinds of companies and industries we're investing in. And if you want to know when our IPO is happening, that's how you need to stay in touch with us. You can get our prips early on. We intend to list on the NASDAQ, still aiming for the end of this year, possibly earlier. And we are a private investment firm, so you can reach out to us off air, bluemahocapital.com. There's a contact form, and I'm David at bluemahocapital.com. And I do personally respond, and we can go from there.
There you go. D, I appreciate it, man. I'm looking forward to us being back.
Can't wait, man.
Yeah,
patties are so ready. I wish I could buy into a patty company, but they're not public.
Actually, can I say this real quick? Final story. This is a good patty story to close it all. So we have been right. We've been here in our flat for 5 weeks. We haven't left for 5 weeks, and Jill has been laying it down. Like she's been cooking every night, and to the point where even she heard me talking about oxtail on Monday on the live. She made oxtail last night. Like she's been cooking.
Man.
We said, we need to order out. Who can we order? We got on the list. There's a restaurant called Jamaican Patty Co. here in central London, and they were not delivering. And so I kept messaging them. I was like, please. They're like, all right, Paul, we're going to do a special delivery. We got a delivery coming. We got 20, no, 10 patties, 10 patties. So not enough for you, D. I'm sorry. But we got 10 patties delivered to the house yesterday. I'm good.
You're good. You're safe. You don't have to deliver to me. I have a Caribbean supermarket down the street, so I'm good with my patties.
Okay. All right. All right. So everybody say goodbye to my man, David. There he goes. Make sure you support him. Brilliant guy. The entire panel. You know, I like to do a temperature check. I see y'all still hanging around here. What did you think? Was today fire? Let me see. If you thought it was fire, you thought it was great. Let me see it. If you thought it was lukewarm, let me know it was lukewarm. If you didn't think it was all that and you wasted your hour and a half, then go ahead and put that in. Let me see what you think real quick. And I want to read this comment. Hopefully this doesn't bias you, but I love seeing comments. This is on LinkedIn. My man Akusa Dancour from the UK says, this has been the first live that I've watched that's given me a lot of learning points, and I am now going to go off and study. And this is what I like to see. I like to see that these lives create a spark so that you want to then walk down the path and learn more. I want to make sure that you go to this right here. Don't forget, join the newsletter where I'm going to be giving you my recaps of each of these sessions. And let me tell you, I am working on something special that includes Monday's session, that will also include today's session, that I'm going to drop in everybody's inbox on Monday morning. So be sure that you do that. And the last thing that I have to say is that you guys be safe. Be safe. Be safe. Thank you. Thank you. I want to say some goodbyes. You know what? I just see fire right here. That was done right on the next. I want to just also thank you all and the panel. And one last little push for you to support them is these panels. By the way, I think the panels have been phenomenal today. I mean, I don't even have to explain how phenomenal the panel is. But what I find to be really special is that the audience, we really do support each of the panelists. And in this time, what I find to be great is that every panelist who's been on, when we reach out and we connect with them on LinkedIn or connect with them on Facebook, Twitter, Instagram, and we begin that dialogue, you have now instantaneously grown your network, right? Your network now includes technically access to everyone who is in their network. And of course, you need to build and foster the relationship. But the beauty of this is I feel like there's matchmaking going on, right? Where I'm helping to introduce perhaps new people into your network, you into their network. And then last but not least, what I love is you all are connecting. I've been receiving so many messages from you all where in the comments you connect with someone and then you go offline and you guys talk with each other, you go offline and you share some information. Let's continue to do that. That's exactly what this is all about. Thank you very much. Make sure you join the newsletter, and I will see you all on Monday at 12 p.m. Eastern Standard Time for our special Mentor Monday session. You guys have a phenomenal weekend. Take care. Bye-bye.